So Kevin and Charlie, another question that we're getting is, I don't have extra cash, but I do not want to miss out on buying, on taking advantage of these low prices. Is there anything I can do?
Yeah, Lisa, thanks for the question. And having been around in 2008, 2009, some people called and said, should I shut off my 401k? The market is crashing. And our advice then and our advice now is to continue to put money if you can. I mean, if you have other reasons why you need the money, if you need emergency money or whatever, then maybe you don't put it in. But yeah, that's the terrific thing about when markets go down and you are putting money in every 2 weeks, you are buying every 2 weeks. And so we are continuing to recommend that people that can to continue to keep their 401k on and buy at lower prices.
Well, and also another thing to consider is rebalancing, right?
Yeah, absolutely. Great point, Lisa, because, let's say you have an allocation plan, which our clients do, of 60% stock, 40% bond, just for an example. Well, right now, things have gone down a little bit, as you know, and let's say it's 50% stock now and 50% bond. Well, we have some software that shows us, oh, you're supposed to be 60 stock and 40 bond, and it's changed. So now what we're going to do is we're going to go in and take 10% of the bonds, sell them, and we're going to buy 10% stocks to get you back to that 60-40. So Lisa, what that ends up happening, or what the result of that is, that we've sold high, because bonds they're holding their own right now. Over the last 365 days, they've been up. They've changed a little bit the last couple of days, but so we essentially get to sell high and buy low to reallocate back to where you're supposed to be. So that's getting money in the market, and buying low is really what we want to do.
Yeah, Charlie, if I can add on though, the issue with rebalancing, and I want to give a number of real life conversations I've had with clients, is that the client will call and say, what do you think? And I'm worried that the market's going to keep going down. And then, we talk about that. And then we say, well, maybe we should rebalance your portfolio. And they say, so what do you want to do? Well, I want to sell bonds and buy more stocks, the things that are falling. I want to buy those for you. And sometimes clients will say, heck no. So I think we need to have that conversation with people. But it is a way, especially if you're somebody that doesn't need the money for 10 or 15 years, it is a way to take the opportunity when markets are down to buy more equities. Now, what if markets keep going down? That's usually the next follow-up question that people will ask.
Yeah.
And then that will rebalance again and buy more when markets go down again. Now, we have a 10% plus or minus, but of allocation, but we can talk individually with anyone that wants to talk about rebalancing.
So aside from your monthly contributions to perhaps your employer-sponsored 401k, aside from rebalancing your portfolio, what other options are available to all of us to take advantage of these low prices if we don't have cash on hand?
The first caveat is that this is more of a feel-good than anything else. I don't want to go into the investment theories about dividends. All the mutual funds, all the index funds, all the ETFs we use, they're all paying, or not all, but most are paying a dividend. So when the dividend comes out, what we can do is reinvest that dividend, and you're buying more shares at a lower price. Okay, so that's another way to feel good in a time when markets are down.